years getting into crypto investing, well, it often felt like trying to find your way through a thick jungle, didn't it? Really complex, kind of risky, and maybe just overwhelming for most people.
Definitely. A high barrier to entry for sure.
But what if, just maybe, a new path is opening up? One that promises not just, access, but maybe simplification. And even a new kind of stability, like blue chip stability.
That's the big question, isn't it?
So today, we're going to try and cut through some of that noise. We'll explore a pretty groundbreaking development that could fundamentally reshape how you, the listener, engage with digital assets.
Sounds good.
Our goal today, really, is to unpack the details of this newly proposed crypto product. We want to understand its key parts, its components, and explore what it could mean for the future of digital asset investments. The main idea here seems to be streamlining access, making it easier, more approachable for, well, a wider audience.
Right. Lowering that barrier we mentioned.
And the thing making headlines, the signal of this potential shift, Trump Media Group, the company behind Truth Social, has just filed for its very first crypto exchange-traded fund, an ETF.
Yeah, that's a truly significant development. For anyone who knows about ETFs already, this works in a similar way to, say, a traditional stock ETF.
Okay.
But instead of tracking stocks, it holds a basket of digital assets directly. So it lets you get exposure to several cryptocurrencies all through one single product you can trade.
Right, which simplifies things quite a bit.
Hugely. And this particular ETF, it's aiming to gather some of what are seen as the top digital coins, putting them under one blue chip fund, making it a more accessible entry point, especially for investors who might be hesitant about buying and managing individual cryptos themselves.
You mentioned blue chip. That's a term we usually hear for like super stable, established companies, Apple, Microsoft, that kind of thing. But in the crypto world, which, let's face it, can be pretty volatile, what makes these specific 5 digital assets blue chip enough for this fund? Is it market cap, adoption, something else?
That's a really critical question because blue chip in crypto, well, it isn't just about how old it is or traditional stability.
With metrics.
Yeah, it's more about established market presence, liquidity, how easily you can buy and sell it, developer activity, and its sort of foundational role in the digital economy.
Okay.
So according to the filing with the SEC, this proposed Truth Social Crypto Blue Chip ETF plans to hold 5 major cryptocurrencies directly.
Now, what's the breakdown?
Well, the biggest piece, a really substantial 70%, is allocated to Bitcoin, BTC.
No surprise there, really.
Not at all. Bitcoin's the undisputed leader by market cap, often seen as digital gold. It has the deepest liquidity, so it's kind of the natural anchor for any crypto blue chip strategy.
Makes sense. What else?
Okay, next up, 15% is planned for Ether. ETH, that's the native crypto of the Ethereum blockchain.
Right, the engine behind a lot of dApps and DeFi.
Precisely. Ether's in there not just for its market value, but because Ethereum is this powerhouse platform for decentralized applications or apps, everything from lending platforms and DeFi to NFT marketplaces.
So it gives you exposure to that whole ecosystem.
Exactly. Exposure to the utility and the economic activity happening on Ethereum. Then there's 8% allocated to Solana, SOL.
Known for speed, right?
Yeah. Another blockchain platform known for really high transaction speeds and scalability. Solana's seen significant growth, lots of adoption, makes it a strong contender for, next-gen dApps and digital stuff.
Okay, so Bitcoin, Ether, Solana, what else?
Rounding out the portfolio, 5% will be in Cronos, CRO. That's the native token of the Crypto.com ecosystem, their exchange, their blockchain.
Interesting. Tied to a specific platform.
Right. Its inclusion gives you exposure to the sort of broader utility and user base of one of the biggest global crypto platforms. And finally, 2% is set aside for Ripple's XRP.
Okay, XRP. That one's had some regulatory history, hasn't it?
It has. And including XRP at just 2% is, it's a strategic but calculated move. Unlike Bitcoin or Ether, XRP faced that long legal battle with the SEC over whether it was an unregistered security. Now, Ripple has had some favorable rulings, but the case isn't totally closed, including it suggests maybe a belief in its eventual regulatory clarity or just its undeniable utility in cross-border payments.
So a bit of risk, but potential upside.
Exactly. It adds a layer of risk maybe, but also potential upside if that regulatory cloud lists completely, and it offers some exposure to the financial tech space.
That's quite a lineup. It really does give a snapshot of some of the biggest names in crypto.
It does, a diverse mix within the top tier.
And the core idea, just to reiterate for everyone listening, is to let you benefit from how these coins perform together, all in one fund. You don't have to buy each one, secure it, manage it yourself.
Correct.
That sounds like a massive convenience for a lot of people, especially those who maybe feel a bit intimidated by direct crypto ownership.
Absolutely. Convenience is a huge factor here.
But, while convenience is great, some might say bundling these assets means the investor loses control, right?
Yeah.
You can't pick your own winners or fine-tune your exposure. Is simplification a trade-off for less control?
That's an excellent point, and yes, it is a trade-off. For, say, a really experienced crypto investor who wants that granular control, who's comfortable with self-custody, managing keys.
Yeah, the hardcore HO dealers.
Right. For them, an ETF might feel a bit restrictive, but for the vast majority of everyday investors, the complexity of setting up wallets, understanding different networks, secure storage, seed phrases.
Oh yeah, the seed phrases.
Exactly. Remembering those feels like a memory test nobody asked for. It can be a huge barrier.
So the ETF just handles all that.
It does. By bundling these assets, it simplifies the whole process. You invest in one thing, and it handles the underlying asset management. You get diversification, professional management, all in one package.
This is more about expanding access, not replacing direct ownership for those who want it.
Precisely. It's about making the pie bigger, bringing more people into the space who might otherwise stay on the sidelines.
Okay, so we've got this curated basket of crypto assets, and it sounds like it's overseen by major players. It really feels like they're trying to build a bridge, between traditional finance and the crypto world.
That's a good way to put it.
But building that bridge, that can't be easy.
Oh.
How does something like this actually work behind the scenes? Who's making sure all these digital assets are kept safe, handled securely, and what risks are still there, even with established partners, especially when dealing with digital assets?
You're right to focus on the operational side. It's absolutely crucial for investor confidence, particularly given, the history of crypto.
Yeah, some bumps in the road there.
Definitely. So to make this work, Truth Social isn't doing it alone. They're partnering with some very big, very established names in the crypto world.
Okay, who we're talking about?
Specifically, crypto.com. They're set to handle several key functions for this proposed ETF.
Like what?
They'll be responsible for custody. That means securely holding the actual Bitcoin, Ether, Solana, Cronos, and XRP.
That sounds critical.
It is. Custody in the digital asset world is highly specialized. It needs really robust, institutional-grade security, think cold storage, multi-signature wallets, things like that to protect against hacks and theft.
Right. Got it. What else is Crypto.com doing?
Beyond custody, they'll also manage staking.
Staking. Earning rewards, basically.
Kinda, yeah. Staking is a process on certain blockchains where the fund's assets get temporarily locked up to help support the network's operations, like securing the network, validating transactions. And in return, the fund can earn additional crypto as a reward. It's almost like earning interest.
So it adds another potential return stream beyond just price changes.
Exactly. It adds a layer of yield generation aiming to boost overall returns. And finally, they'll handle liquidity, ensuring there's enough of the underlying assets available so the ETF can operate smoothly, so shares can be created or redeemed efficiently even when the market gets choppy, managing the daily flow of assets in and out to match investor demand.
That does sound comprehensive. But, there's often this tension, isn't there, between this sort of decentralized spirit of crypto and then handing assets over to a big centralized company like Crypto.com, even within an ETF structure. How do they balance that?
That tension is very real. It's debated a lot in the crypto community.
I bet.
And while the underlying assets, like Bitcoin, are decentralized, the ETF itself is a traditional financial product. It has to fit into existing regulatory frameworks.
So choosing a regulated, centralized custodian is kind of necessary.
It seems to be, yes. Using someone like Crypto.com is a necessary bridge to meet SEC requirements and provide the comfort level that mainstream investors often need. It's, a pragmatic approach to gain broader adoption.
Even if it means a bit of philosophical compromise for some.
Right. For the purists, maybe. And you also mentioned a sponsor earlier. What's their role?
Yeah, Yorkville America Digital, I think.
That's right. Well, Crypto.com is handling the day-to-day active management of the digital assets. Yorkville America Digital acts as the ETF's sponsor.
Okay, and what does the sponsor do?
They're the legal entity that filed the paperwork with the SEC. They oversee the fund's adherence to all the rules and regulations. They have the ultimate fiduciary responsibility, making sure everything complies with financial laws and protects investors.
So Crypto.com handles the crypto side. Yorkville handles the traditional finance oversight.
You got it. It's a two-pronged approach, trying to bring stability and trust to this kind of investment vehicle.
Okay, it sounds like a well-thought-out structure covering the infrastructure, the partnerships.
Yeah.
Seems quite robust.
They've tried to cover the bases.
But this is still a big step.
Yeah.
I imagine there are still some major hurdles to clear before shares of this ETF could actually, start trading on an exchange.
Oh, absolutely.
What's the process for a product like this to actually go live, to be available for investors? What are maybe the regulatory mountains they still need to climb?
Yeah, it's definitely not just a rubber stamp situation. The whole plan is currently waiting for approval from the U.S. Securities and Exchange Commission, the SEC.
Okay, gatekeepers.
Pretty much. The SEC's job is to protect investors and keep markets fair and orderly. For an ETF like this, there are basically two key approvals needed.
Okay, what are they?
First, the SEC has to clear the registration statement. That's a huge document with all the details about the fund, its objectives, risks, how it operates, the fees, everything.
They really dig into the details there.
They do. They scrutinize how assets are valued, how redemptions work, the whole 9 yards. Second, and just as crucial, they need to sign off on a special filing called Form 19B4.
Okay, 19B4, what's that?
That form is submitted by the exchange itself in this case, NYSE Arca, proposing a rule change that allows them to list and trade this new type of product.
So the fund needs approval and the exchange needs approval to trade it.
Exactly. Both need the green light. The regulatory mountain, as you put it, is convincing the SEC that this product meets all the investor protection standards, especially given how unique and historically volatile crypto assets can be.
And if it gets approved?
If it gets through all that, then yes, the ETF shares will trade on NYSE Arca. That gives it access to one of the biggest U.S. trading floors for ETFs. Huge for accessibility, huge for liquidity.
Okay, so that leads to the big question, why now? We've seen so much back and forth on crypto regulation over the years. What's driving the timing for this push? And what does this specific development, this ETF filing, mean for the wider crypto market, especially in the U.S.? It feels like it could be a significant moment, but is it really a new chapter?
The timing is definitely a key part of the puzzle, and there are probably several factors at play.
Like what?
Well, many observers think the current environment and maybe, looking ahead to a potential new administration could lead to a friendlier approach to crypto than we've seen sometimes in the past.
A regulatory thaw, maybe?
Possibly. There's a growing feeling that the landscape might become more accommodating, which would pave the way for more crypto-based financial products.
And there's the political angle too, right, with the Trump media group.
There is that dimension, yes. The Trump media group's move into crypto ETFs, especially using the Truth Social brand, could be seen by some as aligning with a political view that favors less regulation in this space. It adds a unique lens, though, we're focusing on the financial product itself here.
Understood.
But this isn't happening in a vacuum. It's part of a much bigger trend.
Oh. Who else is involved?
We're seeing other major financial players, big names like Bitwise, Grayscale, Franklin Templeton. They're also actively lining up to launch their own crypto ETFs.
So it's not just a one-off thing?
Not at all. It suggests a broad industry expectation, maybe, of greater regulatory clarity coming soon, or at least a strong push for it. It's becoming a crowded but pretty exciting space. The industry seems to be nudging regulators towards clearer pathways for these products.
That's a powerful vision, isn't it? Crypto becoming more mainstream. It almost makes me think of the early internet days, when people doubted email or online shopping would ever catch on.
It's an interesting comparison.
Is this maybe the equivalent moment for digital assets?
I think it really could be. If this Truth Social crypto blue chip ETF gets the green light, if it goes live, it could genuinely mark a fresh chapter for crypto investing in America.
How so?
Well, it signals a move towards greater mainstream adoption, and crucially, it further simplifies access for a much wider audience.
Right, making it easier to get involved.
Exactly. And mainstream adoption isn't just about being easy to buy, it's about changing perceptions. An ETF like this, if approved, could help legitimize crypto as a viable asset class for retirement funds, for institutional portfolios, even for traditional financial advisors who might have seen it as too niche or too complex before.
So it signals a maturing market.
I think so. Moving beyond just the early adopters, starting to genuinely integrate with the broader financial ecosystem, imagine being able to invest in a basket of top cryptos just as easily as you buy shares in a regular company.
That would be a big shift.
It really would. That level of accessibility could fundamentally change how people view and participate in the digital asset economy, making crypto less of a niche interest and more, an integrated part of the wider financial market.
That's a really fascinating outlook. So just to quickly recap what we've discussed today, we're looking at a proposed new ETF from Trump Media Group. It's designed to offer simplified access to a basket of top cryptocurrencies heavy on Bitcoin, but also including Ether, Solana, Cronos, and Ripple's XRP, chosen for their market standing and utility.
Right, a specific blue chip selection.
And the whole operation is backed by established partners. Crypto.com, handling the crucial stuff like secure custody, potential yield through staking and liquidity.
Yep.
And Yorkville America Digital acting as the sponsor, handling the legal and regulatory oversight.
Correct.
It's currently waiting for that key SEC approval. If it gets it, it could trade on NYSE Arca, potentially kicking off a whole new era of crypto investing, making these assets much more accessible to the general public.
That's the potential scenario, yes. Which really leads to an important question for everyone listening, I think.
Go on.
As these digital assets keep evolving and as they become more accessible through these kinds of simplified investment vehicles, how might that change your own approach, your own understanding, and maybe even participation in the future of finance?
That's a great question to ponder. It's definitely a landscape that's changing fast, constantly offering new ways to engage and understand.
Absolutely.
We really encourage you to keep thinking about these implications, stay curious about this evolving world of digital investments. It's certainly a continuous journey of discovery for all of us. Thanks so much for joining us today.